Hello, my name is Nick Antonello, and today I'll be talking to you about the financial accounting cycle. I'd like to take a look at what it is, how it works, and more specifically, how it relates to accounting information systems. The biggest way I'd like to do this is to take a look at QuickBooks because that is the most universal accounting system, and just how it's made our accounting lives so much easier. So we'll start with the first step in the accounting cycle, which is to record each transaction. Each transaction needs to be recorded into the journal, which is a record of all the financial transactions of a company sorted by date. It's really important that we're sorted everything by date because in accounting, it's very complex. There's a ton of transactions. We have to keep as organized as we possibly can. This used to be done by hand. That's why they call it a journal, because people used to actually write it in by journal, which I know sounds crazy, but the enhancements that we've made in accounting information systems has just made this so much easier. It used to be very tedious to do. I'm assuming, I don't know firsthand. I've used QuickBooks, and I can say that it's very easy to do it that way. You just type in the account, which are already pre-made, and you just type in the numbers, and you're good to go. That's it. You don't have to worry about spelling things wrong. You don't have to worry about numbers being entered wrong unless you can't type, which could be a problem as far as I'm concerned. But so next we'll look at the second step of the accounting cycle, which is to take these transactions and post them to the general ledger. The general ledger contains every account. It has their beginning balance, any changes made to the account that we have to. That's where we post the journal entries, and our ending balances to all the accounts. Back in the day, this was all done by hand. Again, it seems very tedious. There's a lot of errors that I could think of that can be made, such as like simple math mistakes, or maybe you entered the number in wrong. A lot of transferring, which I don't know, it could get very messy. And you can have cash, for example, as one of the accounts, and that could have a ton of numbers going into it. It just seems like there's a lot that could go wrong. That's where the advancements in accounting information systems comes in. We have QuickBooks that has all these accounts in the general ledger, and as you're putting in the journal entries, it does it for you. It deducts or adds everything for you. You get your ending balance. Is very nice. It's very simple to use. You really don't have to do any math at all. You just have to make sure that your numbers at the ending balance are correct. It's done in seconds, and like I said, it's not manual at all. Accounting information system has really made, at the very least, these first two steps very easy, as you could probably see. So the third step is to prepare the unadjusted trial balance. This is one of three trial balances that we'll make. This is probably the one that it means a lot, but probably means the least in the long run. The reason why we make these trial balances is because in accounting we like things to balance. This is just the way we are. Things need to equal. We need to make sure that all of our numbers are correct, and if they are correct, they should balance. The point of the unadjusted trial balance is to do just that, is to prove that all of our numbers are correct and that all of our accounts match, our assets equal our liabilities plus our stockholders' equity. By putting all of our debit balance accounts in one side and putting all our credit balance accounts on the other side, we should get two numbers that are equal. If not, we have to go back and make sure that we either didn't make a mistake somewhere or that we added correctly. These need to balance. To move forward in the process, these need to balance, otherwise we need to move back. Which takes us to the fourth step in the accounting cycle, which is to make any adjusting entries that need to be made. Adjusting entries arise from a multitude of situations, mostly when something goes through that probably at first we thought was okay, but in retrospect probably need to change to make it more accurate because our numbers need to be accurate. That's the name of the game in accounting. If the numbers aren't accurate, the information is not reliable, and then there's no point in doing it at all if the numbers aren't reliable. After that, we go to step 5, which is to prepare our second trial balance, which is called our adjusted trial balance, which makes sense because it comes after the adjusting entries. It's the same as the unadjusted trial balance, except this time we add in the adjusting entries, which makes a lot of sense. Again, the numbers should still balance, and if they don't, we need to go back and make sure that we didn't do anything wrong. From there, we take it to the sixth step, which is probably the most important step of all. This is to prepare the financial statements. It's crucial that we get these financial statements out. It's our job. That is, accountant's job is to make the financial statements. Without these, we have no job. That's what it comes down to. A lot of people use these. They're very important. We use them to make sure that our company is doing well or to see if we need to make any changes in our company. Potential creditors can use them. Potential investors can use them. A lot of people use these and look at these, and it's important to understand them, but it's more important to make sure that they're correct with the right data. That's what the point of all this journal entries and adjusted trial balances were. Accounting information systems advancements have made this so much easier. QuickBooks can prepare a financial statement in seconds. It takes the journal entries and just makes them right away, which is something that took so long to do back in the day, I'm assuming. Like I said, I can't speak to this firsthand because I don't know, but I'm assuming it took a lot longer before computers came around and before advancements in accounting information systems has made it just so much easier. From there we go to the seventh step, which is to close out all of our temporary accounts, or to make closing entries to our accounts that are temporary. Temporary accounts are accounts that do not carry over from period to period. These accounts include revenues, expenses, things of that nature. And we have to close them out because they're numbers that don't really help us in making new financial statements. They're numbers that are still very important because we can look at past earnings to predict future earnings perhaps, but we're not going to really use them in making new financial statements. Permanent accounts, on the other hand, like long-term assets and long-term liabilities, are very important. They need to be kept throughout because we are going to use them for long term. That takes us to our last step, which is to prepare our final trial balance, which is the post-closing trial balance. The point of this is, again, to make sure that all of our debits and credits equal, and this is the last one we have to do, which is nice because we've already done two. If the numbers don't balance again, we have to go back and make sure that we didn't make a mistake somewhere or that our numbers are correct. And the same thing that we did for the other two. It's just another one to make sure that everything balances because, like I said before, that's the name of the game. So that's pretty much the accounting cycle. I guess it's a little like crash course on it. It's very clear to see that the accounting information systems has made it so much easier. Like I said, I can't speak to how accounting was done in the past, but I'm assuming that it was incredibly long and hard compared to what it is now. Without these accounting information systems, we'd still be doing everything by hand, which maybe some of our older folks could manage, but I just don't know that I could personally do it. So that's really it. I hope you enjoyed the video. Maybe you even learned something. So thank you very much for your time.